Good morning and welcome to KBRA's inaugural Corporate Aviation webinar. Thank you for listening in. My name is Caitlin Colvin and I'm a Managing Director in the Business Development Group here at KBRA with a focus on investors. For those of you who may not be aware, KBRA is a global rating agency with more than 350 employees and 4 offices. Globally, we've rated over 2,000 issuers and transactions, and we rank first among our competitors for aircraft ABS. I'm joined by Marjan Riggi, Senior Managing Director and Head of KBRA's Transportation Ratings, along with her team, which includes Danise Chui, a Senior Director, Boris Alishayev, a Director, and Mike Dodge, also a Director. Marjan and her team will be taking you through the webinar. The team is excited to announce their new quarterly aviation compendium that will be published on an ongoing basis. This quarterly compendium is reflective of KBRA's intent to be the most transparent rating agency on the street and is in addition to the regular research that Marjan and her team put out. We hope the information in the compendium is useful to investors, issuers, and bankers alike. All research, including the compendium, is available free of charge on kbra.com. We will be holding time at the end of the webinar for questions. At any point during the presentation, please feel free to submit questions through GoToMeeting, and Marjan and the team will be able to respond at the end of the presentation. Without further ado, I'd like to hand it over to Marjan.
Thank you, Caitlin. So as Caitlin mentioned, I lead our transportation ratings group where we assign all our non-ABS ratings. I'll give a summary overview of our ratings universe to lay out the framework for the different subsectors, and then Danise, Boris, and Mike will go into more detail. If you turn to slide 5, we've laid out a good summary of our overall aviation ratings platform. I've roughly divided it into 4 parts, with the first 3 boxes covering what we call corporate aviation ratings. As the public market is very aware, we rate nearly all aviation ABS deals. We won't go into much detail on them here, but we have our lead ABS analyst, Alan Greenblatt, here in case any questions come up. The purpose of this presentation is really to discuss our non-ABS ratings, which is very large, though tends to be mainly in the private market. That said, we have gained quite a bit of momentum for public ratings of aircraft lessors and hope to increase our rating coverage of public WTCs and airlines shortly. Not surprisingly, our coverage is global and covers a multitude of jurisdictions. Now to give a little history, it was the rating of aircraft lessors that laid out the foundation for our strong and growing platform. We began with the rating of Air Lease Corporation in 2013. At the time, we were the first and only agency to rate Air Lease. Soon after, though, we were asked to rate Emerald, which was Avalon's first aviation ABS. These 2 ratings are what catapulted us into the aviation market. And we now rate 10+ aircraft leasing companies, including 7 which are published and 3 of whom rank as top 5 lessors globally. Danise will go into more detail on our lessor ratings and a little on how that relates to our work on ABS. Looking more broadly at our corporate aviation ratings, given that we are a relatively new agency, many of our ratings are not published. However, we have a significant presence in the private placement markets and are well known for ratings of secured aircraft deals backed by leases to airlines, esoteric structures, and first-time ratings of aircraft lessors, both in the U.S. and globally. These include engine lessors and other equipment leasing related to all aspects of aviation, such as ground handling services. We also have the capability of rating airports, as we do many such ratings in the U.S. by our public finance teams. In Europe, airports tend to be private, and so some of the financing dynamics are quite different, but we hope to leverage our knowledge of airport operations as well as aviation in general to rate European airports in the near future as well. Our coverage of airlines has so far been on the private side in support of 80+ private transactions backed by leases to airlines. Our database of credit views on airlines, however, are much larger and include numerous airlines, both large and small, around the world, whose leases provide cash flow to our publicly rated ABS. These are important inputs into our ABS model for the first round of lessees. Boris will go into more detail on airlines, but just to say that because of our wide ABS coverage, we have gained a fulsome understanding of almost every legal jurisdiction around the world. And this is very important repossession of aircraft analysis. And not to mention a good understanding of the dynamics of each region economically. In addition, we published many research pieces on airlines, with our last two covering specifically challenges for European airlines, and also one on the grounding of the MAX, which was well received. More recently, we have also built a skill set in rating intangible assets that airlines may have or have access to. These include airport slots, loyalty programs, and other ancillary services for airlines and airport operations. Lastly, while I didn't specifically highlight regional markets, Mike Dodge would do a summary of that subset too. We do a regional market overview research every year and have ratings both of largest lessors as well as WTCs and ABS backed by regional aircraft. Last year was a very eventful year for regional players, given various large consolidations and JVs among the top OEMs, so we thought it would be interesting for the market to hear our views, which Mike will detail. Now turning to the next slide, 6. I'm not going to spend a lot of time here, but we've summarized the types of KBRA-rated transactions as well as their key structural features. As of this month, we have assigned ratings to 93 non-ABS aviation deals worth nearly $29 billion, both on a published and unpublished basis. As you can see on the pictures on the page, our ratings have included many asset types, with pools of aircraft running anywhere from 1 to 2 and much higher number of assets for engines and business jets. The types of assets run the gamut from passenger to turboprops and include engines, freighters, helicopters, and business jets. Structures of our deals vary widely too, from small pools of aircraft backed by one airline or to multi-lessee WTC fund structures with multiple airlines. We have also done WTC residuals and deals backed by intangible assets. Now turning to my final slide, 7, I wanted to highlight some of the reasons for the increasing importance of this sector, which relates not only to the rising demand for aircraft, but also to very keen interest from investors. Aviation assets provide strong cash flow linked to long-term assets. This is especially attractive to insurance companies, given their long-term liabilities. Moreover, there are depreciating assets, and so their tax benefits are very helpful to balance other sorts of exposures. So far, U.S. investors have been the most active. Insurance companies and institutional investors have been the traditional names, but in recent years, because of healthier leads in this sector, a number of fund-like vehicles have provided opportunities in this sector for equity investors as well. Castle Lake and the former Apollo, now Carlyle Aviation, are good examples. But there are many such fund-like issuers out there with structures and yields for almost every type of appetite, and they are growing by leaps and bounds. Outside the U.S., East Asia has been the most active in terms of volumes, given the value of U.S. dollar cash flows. Chinese investors have mainly invested in large leasing platforms as well as airlines, but given streamlining of insurance regulation, we expect more insurance companies entering the space as well. Japanese investors have always been active, especially for the tax benefits of the JOL and the JOLCO markets, have more recently upped their exposure to leasing platforms and even manufacturing programs from outside Japan. The Oryx stake in Avalon and Mitsubishi's recent acquisition of the CRJ program are very good examples. On a smaller scale, Korea has been active with interest in both equity and debt backed by aircraft and have invested in many aircraft deals. In Europe, the market has been mainly served by banks, but given our discussions with capital market investors, We believe they will be increasing their exposures to the sector for better yield opportunities, especially given very low rates in Europe, and as disintermediation of banks gains space because of stricter capital requirements. In the last year or so, we have already seen rising interest in the private markets, especially for non-USD paper backed by aircraft and issued by non-US airlines, and expect this appetite to grow. We regularly engage with investors across the globe through investor days and by publishing frequently on relevant topics. We found that many rely on our research for insights and contact us often for updates. And the fact that our research is free has been positive for all stakeholders. And as Caitlin mentioned, we're launching a compendium which will cover the overall trends in the market as well as our ratings and topical issues on a quarterly basis. So now this concludes my part of the presentation, so I will hand over to Danise to talk about the leasing companies. Thank you.
Thank you, Marjan. Now we are on page 9 on the slide. Just now, Marjan mentioned a wide range of things that our team has done over the years, and now I would like to hone in a little bit more on our aircraft leasing coverage, which is one of our biggest subsectors within aviation. As you just heard, KBRA started its first rating in aircraft leasing 6 years ago when we first rated Air Lease Corporation A- in 2013. Since then, we have been expanding our coverage in the sector. Currently, we maintain published ratings on 7 aircraft lessors with ratings ranging from A to B+, where you can see in the chart on the slide. In addition, we maintain a few unpublished ratings. And over the years, we also had a few lessor ratings withdrawn due to the rated entity being acquired. For example, we rated Milestone Aviation before it was acquired by GCAS. Our rated lessors vary widely in terms of size, from Avalon having over $28 billion in assets to Voyager with about $2.5 billion in assets. In terms of the length of operations, from over 30 years like ACG to a few years like Air Lease when we first rated it. They vary in terms of assets and strategies. Some specialize in wide bodies, others in narrow bodies. We also had regional aircraft lessor as well as helicopter lessor. Some lessors have a sizable order book. Some focus more on sales and leaseback. But no matter how different the entities look like, we strive to look at each individual one with a tailored approach, and yet we make sure our ratings are consistent across the board. We try to understand the story behind each individual companies and make sure that their numbers make sense. One additional thing I would like to highlight is our forward-looking approach has resulted in our stable ratings over the years, compared to many upgrades in this sector from other rating agencies. While financial metrics are very important, we try to look forward instead of reacting to historic metrics. As Marjan mentioned, KBRA is the leader in private placement ratings. In particular, in the leasing space, we have done private placement with helicopters, engines, multi-lessee structures, in addition to the vanilla-type secured aircraft portfolio financing. Turning to slide 10, shifting gear a little bit. In addition to our significant presence in the leasing space, KBRA is the #1 rating agency of aircraft ABS. Since our first aircraft ABS, Avalon's Emerald transaction in 2013, we have rated 56 public transactions, and we are on every single public aircraft ABS since the beginning of 2016. It is worth noting that we would not have this kind of success in the aircraft ABS without the joint effort from our ABS team and our corporate aviation team. Our ABS team leverages our team's knowledge and expertise with the lessors, airlines, as well as the assets. Our team and the ABS team often join forces on on-site due diligence, meetings, or calls with lessors. Our team also provide all the lessee credit estimate and other asset stress assumptions to the ABS transactions. On the other hand, our team is getting significant amounts of granular information from each ABS transaction, which help us evaluate our airlines and lessors. We talk on a daily basis, and it really helps us all to better understand every aspect in this fast-changing industry. Turning over to the next slide, number 11, I'm going to discuss our aircraft leasing sector outlook. Our stable outlook is underpinned by the strong long-term air traffic growth in the next couple of decades. In shorter term, IATA forecasted that global passenger growth at roughly 5% for 2019, somewhat receded from the peak periods from 2015 to 2018, where the annual growth were roughly 7 to 8%. But the 5% growth is in line with the long-term historical averages. While the established market like the US and Europe are expected to have modest growth, the growth drivers will be from emerging markets, where there will be significant growth in economic activities and the size of the middle class. The growth in traffic demand, as well as the need to replace older aircraft, will create significant and stable demand in aircraft from the lessors. Separately, KBRA expects active trading of portfolio will continue to support the liquidity of aircraft. Larger lessors will continue to sell some of their aircraft to optimize its fleet. These sales are facilitated by the presence of smaller and newer lessors who are eager to build out their portfolio to achieve economies of scale and diversification. They are also facilitated by a robust ABS market as well as significant investor appetite. We also expect to see more consolidation of smaller lessors, especially in Asia, as a way to achieve scale and manage competition. Because of the continued significant investor appetite in aviation, which provide lessors with robust access to funding, both on the equity side and on the debt side, which is critical for this capital-intensive leasing business. In addition, over the last several years, the larger and investment-grade leasing company generally have been managing low leverage, maintaining or increasing their unencumbered asset base, and taking advantage of the still favorable interest rate environment to extend out their debt maturities. All these measures are going to help them to weather the next downturn or market disruption. However, on the negative side, the leasing company's airline customer continue to face intense competition and fuel cost volatility. The non-US airlines also have the added pressure of a strong US dollar. The tough competition in the sales and leaseback market have certainly pressured yields and other lease terms, but anecdotally, we have seen the competition has eased up a tiny bit. The good news is that the leasing companies have been doing really well over the last couple of years. The Boeing MAX 737 grounding does not affect the lessors directly for the time being due to the hell or high water nature of the leases. Here, it's important to note that we are making the assumption that the grounding will be short term. Of course, if that changes, that would have a bigger and structural impact to the whole industry. The lessors also have weathered the recent airline bankruptcy fairly well, without significant impact. For example, Avianca Brazil, Jet Airways. For the most part, the airlines' outstanding receivables are largely offset by security deposits and maintenance reserves. Repossessions have been fairly prompt, as expected, with the exception of Avianca Brazil, which took a little longer, but issues were ultimately resolved. And the lessors have been able to redeploy these aircraft in a timely fashion. As a result, impairment and impact to the earnings have been minimal. Having said that, KBRA expects to see more airline bankruptcy, but believe that the established lessors will fare well because of the diversification and proactive management. With that, I'm going to hand over to Boris, which will discuss the global airlines outlook further.
Thank you, Danise. Turning to slide 13, our outlook on the airline sector is cautiously stable with downside risk. This outlook is driven by a couple of things. On the positive side, the fundamentals generally across most of the regions have been favorable, reflecting strong but moderating traffic growth rates and relatively disciplined capacity growth. Access to capital to fund growth and to refinance near-term maturities has been strong. These positive elements are balanced by a couple of things. leverage that we still believe is elevated in the sector, varying political tension, trade wars, volatility in FX and oil costs, pilot shortage, growth of low-cost carriers, prolonged grounding of 737, as well as infrastructure capacity constraints in Asia and India are all negatively impacting the sector. Flipping to slide 14, we think the airline industry as a whole will continue to be profitable over the next year. There are going to be airlines that will make a healthy profit, most notably in North America, that accounted for 40% of the overall industry's net profits over the past year, and those that will be unprofitable and lose market share. Most specifically in European markets, price-aggressive low-cost carriers continue to cut fares further in order to boost market share at cost of profitability. Increasing capacities is a concern, with a growing overlap within the route network, not only between low-cost carriers and legacy carriers, but also among local carriers themselves. We believe European markets is ripe for consolidation, allowing carriers with stronger balance sheets to acquire smaller, weaker airlines with narrow focus on certain strategies that have not done as well. We also recognize that some low-cost carriers like Wizz, EasyJet, and Ryanair continue to do quite well, though with some variability, given perhaps Brexit and the MAX grounding. To fight off competition from low-cost carriers, larger airlines are joining resources and creating larger, stronger alliances to support member airlines and their passengers. Airlines in the emerging markets are being hit particularly hard with depreciating currencies against the US dollar and volatile fuel costs. In regards to bankruptcies, as highlighted on the bottom left, there have been over 280 notable airline bankruptcies since 2007, with 27 in 2018 and 11 year to date. Most of these failures are concentrated with operators that either were unable to reach a level of critical mass to better control fixed costs or simply lack demand for their product offerings. In our view, the aviation industry is much better prepared to recover and absorb failures through measures like backfilling capacity voids and when lessors and banks find alternative operators for recovered aircraft. In relation to the financing trends, we see appropriate terms on secured side with stable to declining LTVs for both public and private EETCs and other secured transactions. We're also observing a growing institutional appetite for deals backed by intangible assets, such as slots and loyalty programs. As it relates to the unsecured side, we see continued strength for investment-grade rated carriers with mostly unencumbered balance sheets. If there was ever an opportunity to issue or exit secured or unsecured bond market, the time is certainly now. There are two things we're paying closer attention to. One is the extent to which carriers extend their repurchase programs and divert much-needed capital away from delevering, balance sheet, and fleet repositioning. And second, the development surrounding the grounding of 737 MAX. Boeing is building 42 MAXs a month, with a total number of built and parked, based on our estimates, total about 200 aircraft. That number continues to grow with each passing week. Boeing expects 737 MAX to return to service during the fourth quarter. By then, a pool of built and parked MAX aircraft will approach 400 units. With 400 units coming to market at the same time, the question rises, will there be enough capital to fund them all at the same time? While we recognize funding will come in various forms, including cash, bank loans, and indirect funding via the unsecured market, the larger burden might be on the secured market, with heavy MAX concentrated EETCs and other secured transactions hitting the market all at roughly the same time. With that, I'd like to turn the call over to Mike Deitch, who will discuss the regional aircraft market.
Thanks, Boris. So I'll give a brief overview for the regional aviation market. Our coverage of the regional market includes a public rating on the largest regional aircraft lessor, Nordic Aviation, as well as other private ratings in the space. In addition, some of the large commercial lessors, which you can see on slide 15, are included in the chart, also lease regional aircraft. This is a smaller but very important market, primarily served by aircraft in the 50 to 150 seat categories. both jets and turboprops, which total nearly 10,000 in-service aircraft globally. And this is a number that's expected to double over the next 20 years. Strong traffic growth expectations, high barriers to entry, and management expertise are key positives for the established firms in the space. Over the next 20 years, regional air traffic is expected to triple at an average yearly rate of 6%, generating a market demand of approximately 9,000 new regional aircraft, with a market value of about $360 billion, or $18 billion per year in dollar terms. The fastest growth is expected to come from emerging economies, particularly in Asia Pacific, Latin America, and the Middle East, where new routes will be required to connect new and growing mid-sized cities and traditional business hubs. One data point that supports this is the United Nations Economic Department's prediction that the number of mid-sized cities with 1 to 5 million people will increase by approximately 130 cities to 28% by 2030. Demand is further underpinned by US and European airlines maximizing capacity on their shorter routes with regional aircraft. Lessors of regional aircraft face some notable challenges, including managing aging fleets and corresponding maintenance costs, as well as exposure to smaller airline customers who face volatile fuel prices, scope clause restrictions, and pilot shortages. Regional lessors typically require higher touch operations compared with peers in the larger commercial space. But on the other hand, higher lease rates are achievable. For most regional lessors, funding remains limited to ABS and secured debt, with unsecured available for the largest, most established firms. Looking on to slide 17, we highlight some notable trends. The pie charts above show a geographic breakdown of the global regional fleet and new orders. While North America maintains the largest fleet currently, Asia Pacific is on track for the highest growth, the most aircraft orders of any region at 39% of total orders. On the manufacturing side, OEM order books, signified in yellow on the bottom bar chart, remain healthy. The acquisitions of the Bombardier C Series by Airbus and the Embraer JV with Boeing are expected to strengthen production with long-term benefits from economies of scale. More recently, we saw the movements of Bombardier's regional jets and turboprops to Mitsubishi and de Havilland. One last industry dynamic to note here is the recent trend in recent years of movement towards larger, more fuel-efficient regional aircraft. But going forward, we note that pilot scope clauses in the U.S. as they currently stand could distort this demand in favor of smaller aircraft to serve regional routes. Uncertainty is always the challenge for OEMs and lessors, but we believe this is very manageable against the backdrop of strong traffic growth expectations. So that wraps up the regional market.
Thank you, Mike. Now we would like to open up for questions. Let me talk about a question that came in, of course, the elephant in the room, which is the max grounding. I think Boris went into some details about at least what we know and how that could affect the market, which we think that it might be pretty impactful on the wall of financing that's coming up. We don't like to speculate as when the max is going to come back online. I think that everyone has read all the public reports about what Boeing may have said or may not have said. But I think that we are really looking at the market closely. In some cases, obviously, it affects our lessors because some of them have large order books. And, I'm sure that everybody is negotiating with each other to try to reduce the impact on themselves. But we don't really like to say anything about the timing. On the airline part, also some, I think that the key thing that we've noticed is that there's been some, the profitability has been impacted because many airlines have had to cut routes. But hopefully once we have a little bit more information, I think that we will put a research out again, which could summarize our view when we have more detail on what's going to happen.
So a question we just received is, do you see aircraft ABS issuance coming to continuing to accelerate over the next few years. As earlier, Danise mentioned a couple of slides. So going back to 2017, there's about a dozen transactions. Last year, there were about 15 transactions, and year to date, we've seen 9 transactions. So that includes commercial aircraft, engines, as well as some business jet transactions. So as we can see from years in the past and continuing this year, we would see ABS issuance to continue to increase. Maybe a couple deals here and there. Wouldn't expect to see, as went from 2016, 2017, a double in issuance, but as of right now, we have been about 10 plus years since any recessions, so that global factors could impact the entire market, including the aircraft ABS. But as we have seen recently, a steady increase is surely expected.
This is Marjan again. We just had a question about private placements in Europe, which I think I talked about a little bit, but just to say that even though we haven't actually seen a lot of actual investments in aviation-backed deals, because as you know, that's a US dollar market, we've been talking to a lot of investors, and there seems to be a lot of interest in the sector, especially because there's been quite a bit of private placement issuance in other transportation sectors. And specifically, the investors have told us that they'd be very interested in non-US dollar issuance, which will probably be done more by non-US airlines. And I guess it makes sense that they would be by European airlines. We're actually in the process of publishing a paper on private placements in Europe, so we will have a lot more detail on that in a few weeks. Thank you.
Okay, well, that seems to be all the questions that we received. Again, apologies for the technical difficulties we were having at the beginning of the webinar, but we very much appreciate everybody's time, and thank you so much for listening in. We strive to be the most responsive rating agency, so please feel free to contact us with any questions at any time. The team is always happy to discuss. And thanks again, and we hope everybody has a nice day.